Well, welcome everybody to another episode of Ask the Expert with the Martin Iden team. And I'm very excited today because Whit Prouty, this is his week this month to lead the show. And we have Erez Golomb, which is going to talk to us about a new product in relation to commercial real estate and tenant insurance with commercial real estate if the tenants cannot pay, which again, a lot of people have not been able to do. Some major tenants have just said we're not paying the rent, Cheesecake Factory for one. So without further ado, Whit, I'm going to let you take over, and I get to be the sidekick of the show.
Fantastic. Thank you so much, Martin. I really appreciate that. And yes, we're taking a little bit of a turn this week. Rather than focusing on something residential, we figured we would try something a little bit different and go to commercial. So commercial real estate. And I'm very pleased to introduce you all to Erez Golomb of In Touch Insurance and a very unique product that they have for insurance for rentals, for rent. And Erez, introduce yourself, and then tell us a little bit about yourself and your company, please.
So my name is Erez. Thank you, Whit. Thank you, Martin, for having me today here.
No problem.
As you said, we are going to be touching something kind of off a little bit of what you guys been discussing before. It is the commercial real estate rent default insurance. It's a very unique program. Doesn't exist in the US in its form at all, surprisingly enough. For this purpose of discussion over here, I'm going to be using commercial real estate rent default insurance as CRERDI, so that if you hear CRERDI, that's what it is for. A little bit about myself,
Wait, I'm going to just jump and say, so it does exist in the United States with your company, but not anybody else.
Right. It's a very unique, we have the program, and we are the MGU, the Managing General Underwriter for this program.
Oh, great. And how do you spell CRERDI, or is that an acronym?
CRERDI would be, so if you take the punctuation, it's a KR-ERR-DI.
Okay.
So it's a CRERDI.
Okay. Fair enough.
So for commercial
how do you spell
real estate,
go ahead.
commercial real estate rent default insurance, CRERDI.
Exactly.
Got it. All right. Thank you.
You're welcome. So going a little bit backwards, my background starts from accounting, morphing into IT, and then morphs into real estate. Done a lot of real estate work, starting with the apartment sector in Los Angeles area, Southern California for the most part. Moved into commercial real estate, and before you know it, I found myself in the insurance industry. Out of all industries, right? Exciting industry. Starting in the insurance premium finance, and then also kind of I got into the risk management. Currently a co-founder and partner in Touch Insurance Services. We are a retail brokerage, offer risk management in 22 states, last time I checked, and also spearheaded this program through our wholesale MGU company. We got lucky to partner with a great GA in the US, general agent, which is CRC Insurance, and got to work with RSUI and A+ rated insurance carrier on this program. And without further ado, I maybe want to bore you with an award-winning video.
All right.
Great. So this will maybe explain a little bit about what commercial real estate rent default insurance might be.
Yes. So let me do
default insurance might be.
Yeah. So let me try to do the Zoom thing. Share. Let me see. Done.
What happens when tenants stop making payments on their rent? Meanwhile, property owners are incurring loss of rental income and legal expenses all while continuing to pay their mortgage, real estate taxes, and any additional expenses in order to maintain their investment. A cash flow nightmare. Introducing CRERDI. Commercial Real Estate Rent Default Insurance is a gap insurance, a risk transfer vehicle to property owners who are heavily reliant on consistent rent payments from their tenants to maintain their investment. CRERDI is here to help commercial property owners eliminate bad debt. Get up to 6 months of rental income and $500 legal expense reimbursements.
Did you enjoy this award-winning video?
Wow.
I loved it.
Thumbs up.
I was gonna make a joke like, I hope it's animated, and sure enough,
It was.
We haven't had anything like that on our interviews yet, so you're a first.
Hey, I'm trying to do my best over here, you know.
Very good, very good. So okay, tell us more about this. Tell us, maybe, hit the little highlights of, what specifically it is. Obviously, your video did hit some points there, but let's hear it from you now.
So I'll make some few notes really quick. So for the purpose of discussion over here, I will try to be as easygoing with no insurance terms, so that we can have a discussion about that. Currently, CRERDI is under moratorium due to the COVID-19. So we're hoping that moratorium to be lifted soon. And one of the reasons is because of the pause that there exists in the judicial system that we have today. One of the trigger for CRERDI is eviction. And because you cannot process unlawful detainers nowadays, well, you can e-file them, but you cannot process them. It's one of the reasons. CRERDI rent default always been an issue for any property owner. It didn't start today, yesterday, or the year before. People buy real estate, it's their livelihoods. It's painful when the tenants do not pay rent. And that's the least one can say. Guess what happens if he stays more than just the eviction process, going into bankruptcy and so forth. There are a lot of people who rely on that revenue stream, and that's where CRERDI comes into play. It's a gap insurance. And I'm using the word gap insurance very loosely. In traditional insurance policies in the property and casualty niche, most of the commercial general liability do not. Actually, I think that all of them do not cover rent defaults as the tenants stop paying rent. They will cover for some loss of income, extra expense. There's a fire, there's an earthquake, there's the disruption in operation. That's where those policies comes into play. There is no coverage for that specific rent defaults where tenants do not pay the rent. CRERDI also have a very interesting thing that it's an endorsement. The endorsement that CRERDI have beside the rent default is leasehold improvement reimbursement. So let's say that there's going to be a restaurant owner who goes to rent a nice place, and the property owner goes and just do a build-up for him. It can be $500,000, can be $1 million. Kitchen can tend to be very expensive nowadays. What happens if that tenant stop paying rent, and then as a result, the property owner evict the tenant? All that huge amount of money goes into waste. And one restaurant doesn't fit at all. So if the next tenant comes back if the place is being re-rented, then that improvement may not fit that specific tenant, and then we go all over again. So that's another. What?
So does it obviously, it sounds like it covers the rent that you're missing, but will it also cover tenant improvements or TIs?
Yes, so TI, leasehold improvements, are covered as an endorsement. So you can buy it, but it's an endorsement. By virtue, the main gist of the coverage is the rent default. And I'll go into specific exactly on the nuances about what's the coverage is. But most important things, we need to understand first that this coverage was not coverage for imminent loss. So if there is already smoke in the house, you cannot go run and buy fire insurance.
Right.
So if the tenants did not pay the rent and the tenant is in arrears, you cannot just say, okay, wow, I need to cover myself. And then you bind a coverage.
Do you have to put this insurance in place prior to a tenant's lease, or can you put it into place after a tenant's lease has begun, but there have not been any defaults in rent payments?
The answer is yes for both.
Okay.
So and I'll go over the more details, but yes, if there is an existing tenant that has been there before, and yes, you can then insure that unit.
As long as they haven't had any defaults.
And other small things that included as well. But yes, predominantly yes. The tenants cannot have a bankruptcy in the past 5 years, cannot have evictions in the past 5 years, cannot be in arrears in the past 9 months prior to the day of the application, of course. Mm-hmm. The unit must be fully occupied unit, of course, with a minimum of 6 months prior to that as well, unless it's a new tenants completely, which that 6 months and 9 months, of course, do not apply. The other thing that this coverage doesn't really fit for is license to extend bad credit. So even though you have that gap insurance, and even though there's a coverage for loss of rent, or if you choose to get the endorsement, of course, for the leasehold tenant improvement, if the property owner did not vet the tenant and did not do all the due diligence that otherwise he would have to do, collect the security deposit and whatnot, then you haven't done all the work that you're supposed to do as a property owner and so forth. It cannot be extending bad credit because these are bad choices that the property owners makes. The last but not least, it cannot be leased between subsidiaries or affiliates. In other words, if I'm the property owner, but I'm also the tenant and owner user, I cannot insure myself. It's like letting the cat watch over the milk.
Right. I mean, so one of my questions is if you're an owner user, can you get this type of insurance? And the answer is no.
And then, of course, there's an exception because let's say you have a multi-unit, right? And say you leased one unit, or at least few units, and then you occupied one of them as the property owner, as the tenant. Then that unit still have to be listed on the application. We do not charge premium for that, but you can insure the other units.
Okay.
The beauty about CRERDI, it's about the flexibility of it. So in other words, if there's a since we touched the subject, I may jump into it. Since assuming that there are multi-units, you can actually schedule all the units in a schedule. So every lease can have multiple properties, and each property can have multiple units, different tenants. Every unit, it's its own compartment. So you have a limit, aggregate limit per unit. So for a great example would be, let's take just $1,000 a year as a number for the premium. So let's say you would pay for one unit, let's say $1,000 a year, and let's say the other unit is occupied by the property owner. So you only pay $1,000, but you only have coverage for that unit that the property owner is not occupied.
Not occupying, right.
And you will have a $50,000 limit, aggregate limits for that specific unit. And this is the aggregate limit per unit. So as you pay per unit, you get $50,000 per unit.
Okay, so if you have so say you have a large space and you have a tenant that's paying you $50,000 per month.
Okay.
Is the limit is $50,000. So essentially it only covers that 1 month. Is that correct?
So yes and no.
Okay.
Sorry to do it like this. So CRERDI by itself cover up to 6 months of net rent income. And I'm specifically saying net rental income. It's the base rent. So all your CAM charges, your property tax that otherwise you will surcharge, all of the insurance that you may surcharge, all of those triple net leases, only the net rental income applies. So let's say in your 5,000, in this case, let's say 3,000 will be the rent. Well, let's say 4,000 will be the rent. 1,000 will be other fees and insurance, property tax, whatever. The 4,000 would be covered.
Okay.
Now we're covering up to 6 months, and then we have two different co-insurances. Remember, we talked about that this is not to extend bad risk. One way to do that is to apply a co-insurance. In other words, the property owner fits. We ask the property owner to share the risk, the burden. So you can either buy a 50% co-insurance or a 70% co-insurance. What it means that if in a $5,000 in your example, on a 50% co-insurance, the property owner will be reimbursed up to 6 months at a $2,500 per month. Mind you, that is a 50% co-insurance. If the owner buy 70%, you will be reimbursed for $3,500 per month based on 70% of the $5,000. And then, so now let's say the tenants leave in the middle of the year, and let's say that units, let's say that there were claims were paid, let's say up to $20,000. There's still $30,000 left, right? Because it's an annual policy. Let's say the property owner re-rented units. And then the other tenants as well don't pay rent. That's a very unlucky one property owner. And then there is a $30,000 for that extra annual limit for that property. Kind of that makes sense?
Well, I'm going to actually slide back. No, so you're saying so your annual is 50,000, or is it total for the specific unit?
So every unit again have its own aggregate limits.
Okay, the aggregate limit.
The aggregate limit of a policy is $50,000.
Gotcha.
It can be one tenant who worked it out completely, used it, claims were paid, and the insurance carrier make a whole, for the property owner, or either could be two tenants. But again, the beauty about it, every tenant have its own 50,000 up to the maximum of $50,000.
Okay, so kind of. I was going to say, just kind of stepping back in one sense. So what you were talking about, let's talk about specific, what properties are acceptable? Office buildings and industrial buildings? Talk to us about maybe some specifics.
So as long as the property is a commercial property, and we are assuming that there's also a commercial lease in place, because a lease has to be in place. Just because the tenant says, he said, the property says, no, that's what I said, it has to be a lease. So we're looking at office buildings, and we're looking at all classes. We're looking at industrial buildings, all classes. Could be also industrial parks. Can be a manufacturing buildings, which is either light or heavy manufacturing. Can be a warehouse, distributors buildings. Can be retail stores, special purpose, what would be a great example? A car wash can be a great example for a special purpose. A mixed use, I'm sorry?
Medical
building, that's right. Even indoor agriculture building, flex space, hotels and motels. Anything that it is a commercial property, for as long as it's not a government-owned property.
How does that work with hotels and motels?
So you take the entire hotel and motel. You cannot do it per room.
Yeah.
Right? Because you don't have a lease per room. You rent, but you don't lease it. So as long as you lease it, as long as there's a lease per unit, then it's workable.
Interesting.
It's funny enough, because I had a question from an agent, from a real estate broker in Wisconsin, and he said, "Well, but we renting like a fourplexes, and we using it for the purpose was a nonprofit, but we are a business, and we renting the entire fourplex from the landlord, from the property owner, and the lease is a commercial lease, so it's a business."
Mm-hmm.
But
So,
it's not per room. It's not per apartment. You're talking
Right.
about the entire.
okay. So how do you trigger this CRERDI? How's it trigger?
So the trigger is eviction, as I said. So it's all about transparency and how do you actually prove wrongdoing versus being eligible for the coverage. But I'm saying wrongdoing is that what if the property owner didn't make the units inevitable? It's not. There's an easement. There's a pollution. The tenant has to leave. The roof is leaking. And because of it, the tenants move out or don't pay his rent. This is not covered reason, for instance, right? But for any other reason that the property owner end up, and of course there's other exclusions, but for the most part, as long as everything is okay and there is no breach of contractual agreement between the property owner and the tenant, then it's covered under the policy, and then but the owner need to do his due diligence again. So he have to serve with a 3-day notice to pay or quit. Then he need to wait. He will have to, if he can work it out with the tenants, great. Nobody want to have an empty unit, even if you have a 6 months insurance coverage for that. And then once he gone through the process of the 3 days, probably I think what is it like? Let's say 5 grace periods. Then you have a 3 days of 3 days pay or quits. Let's say on the 9th, 10th day, he goes and he file unlawful detainer, which is an eviction. The minute there is an unlawful eviction, detainer eviction in place,
We know what you meant.
it trigger the policy. Sorry for my Irish accent.
Yes, exactly. So we are in an interesting time with COVID, and the fact that what has happened is that the government's come out and said that you can't do evictions on tenants at this time because of what's going on in our economy. So what's going to happen with your CRERDI customers that had it in place prior to COVID happening at the end, when they're actually able to get back into the court system and start to do evictions?
It's a very good question. Luckily, we haven't encountered anything like that. It's really a good question. COVID-19 and pandemic is not covered. Civil unrest is not covered. So let's say a business had to close the business and board it. We have seen what happened in the past 2 or 3 weeks, as sad as it is, and a business cannot operate. It is, or let's say there is a stay-at-home order. There is a mandate by the state, so there would be no coverage for that. It's one of those exclusions.
But do you anticipate the fact that you are going to have clients who have had tenants go out of business and or still try to do business, but they're unable to pay rent, and then essentially the landlords will be going through the eviction process once the court system opens back up again? And then by triggering that actual eviction process, then does that trigger CRERDI?
Again, it's all about the pearl. What was the cause for the pearl? So if it was because of a civil unrest, there was riots, let's say, there would be demonstrations, there would be stay-at-home orders by the state. It is not covered.
Gotcha.
It's what comes first.
Okay.
So hypothetically speaking, probably not.
Gotcha.
So Erez, I know we have about like 5 minutes left, and maybe Whit, you had this, but what is the premium for this? How do you calculate how much this policy is going to cost?
So I cannot give you I cannot give you the secret sauce.
Fair enough. But we'll give us a range.
That's actuaries. We found out that when you are asking for a 50% co-insurance coverage, you're looking at about $850 annual premium per unit. And when you do the 70% for only the rent default, it's about $1,150 a year.
Okay.
Which, when you come to think about it, it's very affordable.
Mm-hmm.
It's not a crazy premium amount to pay.
I would imagine that it does. Is it industry specific? So are those premiums whether or not your tenant is a restaurant, whether or not your tenant is a lawyer in an office building, or does that matter?
Nope, nothing whatsoever. It's all about the net rental income. That's it.
Interesting.
And that's the beauty about it. Then, of course, if you add the tenant leasehold improvement, the TIs, by the way, the TIs, the tenant leasehold improvement, have its own aggregate limits. So if we said that every unit have a $50,000 aggregate limit, so does the tenant improvements per unit. So if you decided to purchase the endorsement, you will have 50,000 up to the maximum of 50,000 annually for the tenant, for the TI, for the leasehold improvements. And then, of course, there's going to be extra surcharge for that as well.
Interesting. Okay.
Of course, there's a lot of nuances. There's more little details, but most of them, if you go to the website, to CRERDI.com, I think at the bottom of the page, there is frequently asked questions. There's a few cases. And you can actually find all the questions that one needs. There's also a quick indication that we created it. So you can actually put like the state, how many units do you have? And then you will put the unit number, the monthly net rent, elect if you like 50 or 70%. If you elect an endorsement of the leasehold tenant improvement, it will ask you what's the balance of that amount. It will give you the premium right there.
So how long has this type of insurance been available? Did it start this year, or how long has it been in place?
2020, yes.
So this is a brand new product for the insurance industry.
Yes, yes.
What percentage?
It's a completely different animal. It's surprisingly enough, coming from the real estate, but having the real estate background that I have, seeing that this thing that were not exist before, it's a mind-boggling. It's like, I think it has to do with how do you work it out within our legal systems. Now, said that, it does exist in Europe, but mind you that in Europe, it's workable. It's worked a little bit different, and they have completely different legal system.
Right. What percentage of people are taking this, or what do you anticipate a percentage of people taking this, or businesses?
So I think that the most one-off property owners would have this coverage. I think that the majority of people in that spectrum would be anything from 1,000 to 50,000 square feet structures. I don't think that many states will be participating in this program because some of them are more property owner employer favored, versus like California, New York,
right.
the water states.
Mm-hmm.
So East, West, North, and South, those are the most liberal states where tenants have more rights.
Got it.
So I think that we will see more on those than in the center.
Okay, so are you, is this product available in all 50 states?
Yes, the product, well, again, as I said, there is a moratorium right now.
Well, yeah.
Moratorium on that program, but assuming that lifted hopefully soon enough, yes, 50 states.
Well, that's great. Well, thanks, Erez. We're almost out of time, Whit. So you want to do the official sign off?
Yeah, well, Erez Golomb of In Touch Insurance talking to us today about commercial real estate rent default insurance, a unique product brought to us by his company, In Touch, throughout the 50 states. And I want to thank you for sharing all this information with us. Really unique product, and I've got to think that there aren't a lot of people that know about this type of product. So thank you again so much for your time.
Thank you, guys. Appreciate it. Thank you.
All right. Thank you. Thanks, Erez. I'll talk to you guys later.
Have a good one.
All right. Take care.
Bye-bye. Thanks. Bye-bye.